Hi folks, and welcome to Become Financially Independent. My name is Björn for those who don't know me, and today I'm going to show you 5 dividend stocks that can easily pay you $1,000 on dividends every single month in just a few years. And the best part about this is that it's passive income, which means that you don't have to do anything at all to make this money. And now imagine how nice life would be if you had an extra $1,000 every single month and see your account growing even faster and bigger as you will earn compound interest from this dividends. Means you earn interest on interest, and I'm pretty sure you know what I mean, as everyone knows the story with the king, the chessboard and the rice grain, right? But with further ado, I'm going to talk first about the different stocks, starting with the lowest dividend yield, and then after I'm going to talk about the exact strategy that I follow that took me from making 0 a month in dividends to now 1,000 a month in dividends. So you can follow my exact strategy and hopefully replicate it for yourself. Alright, let's get right into it. And the first thing is, what are dividend stocks actually? So it's basically investing in a company that pays you a percentage every single year. Imagine you buy 1 share of Apple, for example, and the dividend is 10.3%. Not that Apple pays this high dividend, but in today's video I will show you some companies who do. So you are going to get paid 10.3%, however, of whatever amount you invested in Apple every single year. Alright, so now that you know what a dividend stock is, I'm going to be talking about the 5 different dividend stocks that have growth potential and at the same time have 4.4 up to 11.9 dividend yields, which is massive. Let's start with the first one. CocaCola. Just kidding, folks. I will not talk about Coca-Cola. As we all know, Warren Buffett is invested in, and don't get me wrong, it's a good company as they never missed to pay their dividends for the last 100 years or so, but it's just boring, right? And I want to show you some other options. So let's start with the first one. IBM. With 4.7 dividend yield. What? IBM? Are you crazy, Björn? Not so fast, folks. And hear me out. IBM waited too long to shift its focus to cloud computing, as we know. As a result, it's seen sales for its legacy operations go in reverse. But following a decade of transformation, a new IBM is blossoming that can once again deliver for its shareholders. When the June quarter came to a close, IBM reported $7 billion in cloud revenue, which was up 13% from the prior year period. More importantly, cloud sales made up 37% of total revenue. Since cloud margins are considerably higher than the margins associated with IBM's legacy operation, they are the key to growing the company's operation cash flow. As a reminder, IBM loves to use its cash flow to pay its juicy 4.7 dividends. And the second stock comes with a 7.1 dividend yield, the Altria Group. It is a tobacco stock. But Björn, tobacco is really bad. I know, folks, but we are here to generate income and you want to make money, right? Therefore, we have to look at this sector, as few industries have more consistently delivered for investors over the long run. Altria Group, with the ticker MO, the company behind the premium Marlboro cigarette brand in the US, is a good bet to double investors' money. To state the obvious, tobacco volume metrics have been headed in the wrong direction for decades, as people have become better educated about the negative health effects of tobacco use, as we know. Fewer adults have chosen to light up. Interestingly though, this hasn't hurt Altria as much as you think. The company has exceptionally strong pricing power, thanks in part to the addictive nature of nicotine, and has been able to raise prices to offset cigarette volume declines. What's more, Altria is aggressively investing in its future. It's been introducing the IQOS heated tobacco system licensed in the US from Philip Morris International to a number of new US markets and holds a 45% equity stake in the Canadian marijuana stock Cronos Group. Expect Altria to work hand in hand with Cronos to develop vape products and establish a marketing strategy. Since Altria offers investors a dividend yield of 7.1%, only modest share price appreciation would be needed for Altria to double your money by or before 2029. Third one is Enterprise Products Partners with 8.4% dividend yield. A high yield oil dividend stock to diversify a bit our portfolio that can use its superior payout and share price appreciation to double your money within the next years is Enterprise Products, as I said, with the ticker EPD. So, and after the last year, I can imagine the idea of owning oil stocks is low priority for you guys, right? That's because an historic drawdown in crude oil demand ravaged the operating performance and balance sheets of most drillers as we know. However, Enterprise Products Partners was hardly faced because its midstream operator, in other words, it controls more than 50,000 miles of pipeline and 14 billion cubic feet of natural gas storage space, in addition to more than a dozen processing facilities. The company's take or pay contracts are set up in such a way that the majority of its revenue and cash flow is highly transparent. This allows the company to outlay capital for infrastructure projects without having to worry about weighing down its profit potential or adversely impacting its lucrative dividend, which stood at 8.4% this week. Something else noteworthy about Enterprise Products Partners is its dividend. The company has raised its base annual payout for 22 consecutive years. Important. And now let's move to the two big ones with 10% and more dividend yields. First one, Altria Capital Management with 10.2% dividends. For income seekers like we are, who prefer the dividend to do most of the heavy lifting, Mortgage Real Estate Investment Trust or REIT, Altria Capital Management with the ticker NLY is a good bet to double your money by or before 2029. If you were to reinvest your payouts at this 10.2 yield, annually dividend alone would double your initial investment in about 10 years. As one final note, over the past 2 decades, Altria has averaged around 10% dividend yield, and it's paid out over 20 billion in dividends since its inception nearly a quarter century ago. Now, for the last stock on our high dividend yield list. Investcorp Credit Management BDC with the ticker ICMB. We'll take a look at the business development company. These investment companies put their money into small and mid-cap enterprises, making capital and credit available to corporations that sometimes have difficulty accessing capital markets. Investcorp has a 16-year history in the business, offices in London and New York, and some 35 billion in total assets under management. DOT gives the stock an hold rating, as they missed obviously the analyst expectations and the earnings report wasn't really good, as they invested in other companies and therefore increased their debt. But let's see what the share price is doing, and it could be a good entry point, as we always want to buy low and sell high, right? Alrighty, now let's have a look how much years and capital you need in order to get 1K on dividends each month. But before that, I want to share with you guys the best way you can start buying dividend stocks, because there are so many ways to do it, but there is particularly a way that I like to follow. So I would always use a commission-free broker first that has the option to do DRIP, dividend reinvestment plan, and basically just means whenever you receive a dividend payment, instead of getting that money in cash, you actually get it reinvested back automatically into the stock, which prevents you from paying taxes. But with that out of the way, let's have a short look how much you actually need in order to get 1K each month on dividends to either reinvest, what I would do, or to make holidays or buy something you like, which I totally recommend not to do because you want more dividends than just 1K each month, right? So let's assume you just start right now and you invested 10K and you have an expected dividend yield of 5% and your share price does not increase and DRIP is activated. That means you will get 510 bucks on dividends the first year, and in 10 years 796, and the total balance after 10 years would be $16,436 instead your 10K you initially invested. But let's have a look. If you would have actually 10% of dividends and invest in the stocks I mentioned, you would earn $17,000 in 10 years. So in order to get to the magical 100K, which are by the way the hardest to get, you would need 50K, and besides, let's assume these stocks grow 5% each year, which is nothing if we have a look at the S&P 500, and the dividend yield stays at 10%. In only 10 years, with 50K capital, you would get $1,000 on dividends each month. But seeing these big numbers, please don't get discouraged. I believe in you and you can do it. So if you can save only 20 bucks a month, my advice would be invest in yourself and gather knowledge so you can then sell your knowledge for more money, or start a business, because we need money in order to make more money, right? But if you can save $500 or more, invest all the money you can each and every month. And the best way would be with an automated transaction to your broker or savings plan to invest directly at the beginning of the month in stocks. As we all know, by the end of the month we spend everything, right? And you will see that over the years it will pile up. So try to think long term. By the way, I will link the dividend calculator in the comments field below. That's it for today. I hope you liked the video, and if so, please give it a thumbs up, as the damn YouTube algorithm likes this stuff. Many thanks for watching, have a great day, and as always, stay focused and don't get greedy. See you next time.